All right, at this point, slideshow should be visible. I hope everybody is seeing that. So as I think you already heard, my name is Andrej Divis. I lead commercial vehicle research here at IHS Markit. And again, I'm hoping to bring some useful insights to the group. What I'd like to do today is I'd like to spend just a few minutes on some background about the company IHS Markit for those of you who are not familiar with us. Then I'd like to go through a couple topics. I'd like to spend some time just real quickly looking at Mexico's commercial vehicle market in the global context. Where does the market fit in? What does that say about its potential? After that, I'd like to take a look at 2021 and beyond. I think you already heard in some of the earlier presentations, some of the trends, some of the data points. So I'd like to just highlight a few things we observed and then discuss where we think things might be headed. Finally, I'd like to conclude by touching on a couple structural issues related to the Mexican market performance, including the issue of used truck imports, among others. So with that, we'll go ahead and get started. IHS Markit itself is a leading data provider to industry and other companies. For those of you who aren't familiar with us, we do business with most of the global Fortune 500, and just from a U.S. perspective, with 94 of the 100 largest U.S. corporations. We bring together many capabilities, deep capabilities across many areas, some of which are shown here. I'm speaking to you today from an automotive, from a commercial vehicle perspective. You can see that down here. But the company really offers many other insights, which my team and other teams in automotive certainly benefit from. In particular, I'm going to be sharing with you today also some insights from our maritime and trade team, which manages import-export databases. I'll be sharing some insights also from economics and country risk, just to highlight a couple other things. And you can see some of the other areas where we're active here as well. Again, for those who aren't familiar with IHS Markit, company became IHS Markit in 2016 with the merger of then IHS and Markit. But we have a legacy of many other companies that have joined the IHS Markit family, if you will, some of which you might have known under other names. I'd just like to pause for a second and highlight in particular Global Insight, CSM Worldwide, and also RL Polk, all of which were dedicated automotive data providers, which are now part of the IHS family. And then finally, just in terms of our perspective within the industry itself, here's just a couple other statistics. In brief, we do business with and have relationships with most of the suppliers and manufacturers in the industry. We're also working with many dealer groups around the world and have a wide range of capabilities. And I think with that, and I guess as I go through the material today, I'll be showing you a variety of things, as I mentioned, and I think my colleague Irina Sanchez already mentioned it as well. For anybody something where they have a question or want more information, there will be a question and answer session at the end of today's presentation. In addition to that, though, feel free to reach out. Feel free to contact the event organizers. We'd love to get in touch with you. So without further ado, I'll go ahead and start. As I mentioned, one of the first things I wanted to do was to kind of talk about Mexico in a global context. But before I do that, one bit of perspective I'd like to provide very quickly, because I know all of you on the phone and online today are certainly familiar with statistics from INEGI and also from ANPACT. And I just want to make one statement about how our market data compare with the INEGI and the ANPACT data. In brief, for all of the brands and parts of the market that are covered in the statistics here, our data will be very close. They'll be within 98%. and we're using these data as a reference. Our total market size, as you see here, this is with reference to 2020, is about 5,000 units higher. And that's what I'll be talking about in the rest of this presentation. And the reason for this difference, there's a couple reasons. They're really shown here. It's really three things. We focus all of our coverage on, in my team, on classes 4, 5, 6, 7, and 8. So one of the things that we're doing is we're appending sales numbers for Ford and also for Ram trucks, now Stellantis. That's one piece of it. That's the biggest piece of this adjustment, that hitting mainly class 4 and 5. In addition to that, we are referencing our import-export statistics through our Maritime and Trade Service to complement some of the statistics with information about the activities of Chinese OEMs in the Mexican market. All of that together gives us a slightly higher market size. So as I'm talking, just kind of keep that in mind. It'll make it easier for you when you're thinking back to maybe numbers that you're more familiar with from some of the other sources. Okay. So Mexico is obviously one of the largest commercial vehicle markets in the world. In fact, it's a top 15 market. And in 2019, we think Mexico was probably number 12 in the world in terms of market size, in terms of registrations of new class 4, 5, 6, 7, and 8 trucks. Everything I'm talking about here, by the way, is trucks excluding buses. You know, it's even more impressive when you consider some of the markets at the top here, which are China, mainland China, India, the United States. You've got Brazil up there, you've got Russia up there, some really large countries at the top. So Mexico's rank is very, very significant. And this reflects obviously the importance of trucking in the economy, the importance of industry in the economy, without question. When we take a look at you know, how Mexico compares with other countries and what that might tell us about the development path in future as the Mexican economy continues to grow, the answer is there's very significant potential for further growth. So we think the future is very, very bright for this truck market as well. And this chart here just kind of shows a couple data points illustrating that. It shows income per capita in real dollars on the left. So obviously the higher it goes, the higher is the income. And then over here, you've got trucks normalized for population. So it's trucks per million persons on the x-axis. And right now, Mexico is down here. You see some other regional economies here as well. Argentina's here. I've also got Colombia and Brazil. And then proceeding up the line, I put Puerto Rico in the middle. And then up here, you've kind of got US and Canada. But the fact is, if I were to do this comparison for, I know if I added more markets around the world, it would look very similar. The message is the same. The potential is strong. And we think, you know, if we look at this decade, we're looking at the end of the decade, where could the market get to? You know, we certainly think that a return to previous market records is possible. And in fact, you know, the market does have the potential to kind of reach this 40 or 50,000 units per year level, you know, at some point, probably not in the next couple of years, but the potential is definitely there. And you know, there's some things that might make reaching this level earlier, might make it later. I've listed some of them here. The fact is, I'm going to talk more about these in the remainder of the presentation. So I think in the interest of time, I'll go ahead and move on. So that sort of gives you an idea of how we think about Mexico structurally. But of course, 2021 is not your average year. It's a very special year. The country, the world is coming out of crisis. And it's a fair bet that 2021 is going to be unusual. 2022 maybe as well. 2023 maybe as well. So where do we see this headed? To answer that question, I'd like to provide a little bit of economic context. And again, this is from IHS's economics team. But just to kind of provide the basis and the perspective. So when we take a look at Mexico and we look at some of the other countries in the region, the rest of Latin America, if you will, the major economies, the pattern has been very similar across all the countries, broadly speaking. We had a very deep contraction, which we all experienced and managed in April and May. Mexico's the red line, by the way, followed by a gradual rebound, which sort of increased in speed as we went through the summer. And at the end of 2020, around December, most economies had recovered nearly all of the lost economic output, but not quite. And you see here, Mexico's kind of a little bit in the middle of the pack, but as we're kind of looking at December, it is lagging there a little bit behind some of the others, including, for example, Chile or Colombia or even Argentina there. But by and large, very similar pattern across the region. So, you know, is Mexico's story going to be the same as everybody else's, or is it going to be a little bit different for some reasons? So we think it will be a little bit different. The first reason we see Mexico's situation to be a bit special really has to do with this slide. And this slide shows, I mean, you can see the title, but it shows the deficit in government spending as a share of GDP. So the larger the deficit, obviously the more borrowing is going on by the government in the 3 years shown. And you can also infer, particularly in 2020 and 2021, the more borrowing is going on, the more stimulus the government is making available for the economy. And like most of its peers, Mexico significantly increased its deficit in 2020. In fact, it just about doubled it in percentage terms, which is similar to what you see across the others. But when you see the absolute size of the deficit, it's obviously much smaller than everywhere else in the region. From a budget management standpoint, that's obviously very good. But in terms of economic impact, this makes this deficit spending have less reach, have less lift, if you will, for the economy than some of the others. And so this is really one of the reasons when we think about what happens next, we see less of a tailwind, less of a lift from a government spending package maybe than we see in the region as a whole. That's the first point. Secondly, when we turn to the private sector, the private sector has got some special dynamics as well. And this slide here shows percentage change by quarter, year over year in investment spending in capital goods, factories, buildings, et cetera, bridges. And this chart does show public and private, and I really want to tell both stories, but the private sector story is particularly important here. And you can see about a decade of data here. So this is a broader view than on that deficit chart, but the real takeaways are two. One of them is if you look just at the last year and a half, 2 years, obviously investment spending growth has been negative. So this has not been contributing to growth. In fact, it's been doing the opposite. And the second thing is it's been both public and private investment that has contracted. So in the previous period, we were seeing a pretty steady secular decline in public investment over the period. However, that was being offset strongly by private sector investment, which was leading to, you know, you see these green bars, that's the investment overall. It remained positive because the private sector is so big and impactful. Lately, that's not been the case. And then this preceded the COVID crisis. And so the second thing, in addition to maybe not as much of a government about 2021 and 2022, the other where we have concern is about prospects for capital goods in the short term down growth, but it also drags down growth in the longer term over time if this isn't taking place. Just a couple other points. In addition to thinking about the government and about companies, we're also taking a look at the private households. private persons. This slide provides a little bit of information about that. It shows you the percentage change in credit to the private sector year over year. So again, it's in growth rates. You see that zero line here. Actually, I can maybe change to a laser pointer. And the real story here is that the growth to households supporting consumption has contracted very sharply, as has credit to firms, by the way, which you can see here. So in the short term, this contraction in credit, this is certainly going to be a short-term headwind as well. Finally, when we have a look at the labor market kind of had that recovery pattern similar to the economy as a whole, but we've not quite got back to where we were. So there are still, according to our data, about 2 million jobs missing that were lost and not yet recovered. So again, this is going to be a drag on private household spending. So there's less credit going there. There's also some jobs missing. This will hamper that last bit of the economic recovery as well. I'm going to skip the comment about exchange rate for now. Suffice it to say that we do anticipate a little bit of further recovery in the peso, a little bit of appreciation over the coming period. So what's the bottom line? Where does this leave Mexico in terms of returning to previous levels of GDP and then going beyond it? This chart here shows you that. And it compares Mexico, what we think is going to be Mexico's trajectory with the other markets in the region. We're here, obviously, kind of Q1 2021. And we see Brazil and Uruguay kind of reach previous levels by the end of this year. We expect Mexico to reach previous GDP levels only at the end of Q4 2022. So even though there's been that very sharp recovery in economic output, that last little bit we think is going to take about 2 years to recover for some of the reasons I mentioned, having to do with challenges in investment spending, public and private, ongoing joblessness, challenges with credit availability to private households, just to name a couple of the factors. And so this is really the background to our truck outlook. And this chart here just kind of summarizes our outlook for Mexico in terms of numbers, in terms of the key GDP components. A couple takeaways. So let's look actually first at the longer term, 2024 to 2028. Based on everything I've told you, we sort of see Mexican growth being driven by the private households. So note that expected growth in household consumption over the 5-year period at the end of the decade, that is above the level of GDP growth overall. So this is really driving the growth. This is what we expect to drive the growth. You'll note government consumption and real fixed investment, capital goods spending down here are actually below the level of GDP. So we think they're going to be a little bit of a drag on the economy. They're not going to be keeping pace in the longer term. In the short term, the story is actually a bit different. In the short term, you see coming out of the crisis, we do have a boom in spending and in capital goods investment in 2021. Again, this does reflect some of that deficit spending we showed in the earlier numbers. Also, we do have a healthy recovery in private consumption as well, but not as high. All of this together gives us a expected GDP growth rate of 4.4% in 2021, which is well above trend. And the other comment I want to make about that is this is actually also above consensus. And so, we do try to keep track of what all the banks and other big companies are saying, and our number is above the average of many other observers right now. And one of the reasons for that, in addition to our analysis of the Mexican economy and its potential, also has to do with our analysis of the US economy and the close relationship between the two. I'm going to say more about that in just a second, but just hold on to that first right now. The final assumption that I'd like to share with you is also about vaccinations, and then I'll come back to the overall growth rate. Anybody doing any forecast in 2021, 2022 will probably talk to you about this. So these are our assumptions. We are basically tracking the official calendar, which states that the population is to be fully vaccinated by spring 2022. But there's an important milestone which we think will be reached also in 2021, which is this piece here, covering inhabitants over 40 years of age and older. So indeed, this is the official calendar, and these are the assumptions that are sitting behind the numbers, if you're wondering. Back to this rate, you can see here, if you're reading the bullet here, the reason for this strong number that's above consensus is because in making this number, we were already anticipating a third U.S. government stimulus package, which is obviously making its way currently through our legislature to be signed by the president here in the U.S. Just one thing about this, that stimulus package is actually larger than our economics team anticipated when they did the modeling. And so it's even possible that this number is going to be revised up a little further in one of our next updates in the next month or two by the economics team. So just to pass that on as well. Right. Okay. So what does this mean for the Mexican truck market? So here's where Mexico fits in from a growth perspective. I mentioned already that the U.S. outlook for 21 and 22 may be revised up a little more. This could potentially bring Mexico up a little more as well in 2021 and 22. This is interesting, not just because the economies are correlated, but also because, as you can see on the left here, this shows truck sales in the U.S. and Mexico here on the right scale. Mexico's blue on this slide. The big truck cycles are very closely related to one another. This is something that we've been observing for many years. And so as we leave 2020 here and we start to climb out of our contraction in 21 and get into 22, as the U.S. truck market bounces back, we certainly expect the outlook for Mexico to bounce back as well. And to the extent that there's upside in the U.S., we think there will also be upside. Just for reference, just very quickly, right here is our outlook for the U.S. truck market. This is Class 8. This is classes 4 to 7. Couple things. There is a significant, the black line is the growth rates, and the units are obviously on the left. So you could see in both cases, medium and heavy, we're expecting a bounce back in 2021, a very significant one. However, not getting us back to 2019 levels. We're expecting 2022 to remain also strong, and then we're expecting to see a drop back, at least in Class 8 in 2023. Just a word about this. This is our published outlook right now, but as I mentioned, with that U.S. stimulus package being a little bit larger than we'd assumed, there may be some more upside happening here, so just kind of keep that in mind. But for now, take this as our baseline U.S. outlook. Finally, turning to Mexico. I think you heard earlier already, truck sales in Mexico, medium and heavy truck sales in Mexico last year collapsed more than 30%. Most of that was borne by the tractor side. The tractor side consistently, in most markets, is more volatile. This side fell by almost 40%. Straight trucks and cab chassis, class 4 to 8, all the rest of the market fell a little bit less, about 28%. By brand, the effects were sort of they were varied. They were varied, and you can see here some of the impacts, and some of the variation that you see here for the brands. It really depends on how much exposure each of the brands has to this tractor side. A much larger contraction, say, for Freightliner than we did for Ram. So that's a little what's going on there, but everybody got hit, no question. When we look at the monthly data, we can get a feel for where we are now, and already start to get a feel for how strong the recovery is. And what we've done for this slide is we've taken the monthly sales data that we gather from the official sources, and we've gone ahead and added some of that information about Ford and Ram and the Chinese OEMs, and then we've gone ahead and annualized the data. We use a software program to do that, and this is really the result. The nice thing about annualized data is for every month, then you can immediately read, you immediately know how you're doing. So for example, in December, the way to interpret this is that on an annualized basis, the market was running at about a 30,000 unit rate. The other thing that you can see is that this rate increased significantly since summer, and that the low point, compared to the low point, which we reached in May, that annualized rate, if you look at just the green, not the trend, but the actual result, was about 200% higher. And so you can read all of that off of this annualized rate. And in addition to that, it's probably fair to speculate that this trend, which is certainly turning up, is probably going to continue to turn up for the next few months at least. So kind of visually, the market's probably, it's on track to do this as long as there's no nasty surprises. So these are some of the things that we can see right here in the monthly data. And I guess as a side note, you can also see on the a little bit left with your eye there, the huge size of the pre-buy preceding the last emission change, the collapse that happened after that, and the little bit of a recovery that we've had. So all of that is now behind us, and the market is now on a steady upward trend at about a 30,000 unit annualized rate. And having done all of our work and talked with the economics team and worked in that 4.4% growth rate and worked out what that means for freight and what that's going to mean for truck sales, in a nutshell, this is the result. I think that we're going to go from about 6,000 trucks in 2020 to nearly 35,000, 34,000 in 2021. And beyond that, just a couple other points on this chart, because it does show you the outlook to 2028 also. As we see some of that strong growth in the other economies as they're recovering, and in particular in the US, those really strong numbers that we're expecting in the US, we also anticipate that the Mexican truck market is going to have a couple years of above trend results. And you can see that here in this period. This gray dash is sort of what we would expect in a kind of normal year. And clearly right now, we think we're going to be running hot. We're going to be cyclically above the trend for a period of time. And what that means is that through 2028, if you look 2028 against 2022, we think the annual growth rate is going to be around 2.7%, slightly exceeding GDP. That's really the bottom line. Looking at 2021 alone, these are the growth rates for, we think Class 8 will increase about 16%. We actually see a little bit of a stronger increase in the medium duty space, but a lot of this is really on the lower side, on the 4 and 5, Class 4 and 5 side. But we think that growth rate could be as much as 40. Look at 6 and 7 alone, that growth rate would be less. Finally here are some of the risks and opportunities that we see market in the short term and the long term. I'm going to read through all of these. I think those of you in the audience who want to can probably get the slides as a PDF afterwards. But I just want to pause on a few things, just a couple things. One of them is we are assuming a postponement in the next round of emission regulation changes. So just that's one background assumption that I need to point out. Again, this US stimulus is a little larger than we had been expecting. So there will be probably, when we work it all out, a little bit of upside to the market in 21 and 22 as a result. We think that the start of the new trade arrangement among Mexico, the US, and Canada will provide some valuable stability, but probably not generate dramatic change. for now. And I guess the final point is, and I'll talk more about this in a second, is on used truck imports, which have been impacting the new truck market in Mexico in recent years. We don't see necessarily tighter restrictions lowering the amount of used truck imports, but we do think that as the emission standards are upgraded, this will sort of naturally maybe limit some of that in the forecast. So those are a couple of the key things, and you can read the rest of these assumptions, when you do get the slides. I think the rest of the, and many of the things I already talked about, such as the COVID and so on. Okay, quickly on structural issues. So this next section goes into a couple aspects of the truck market outlook, sort of beyond beneath the total level. First point, and I think this may have already been discussed in an earlier presentation, but Mexico's market is fairly transport intense. And when we look at the value add or the output of the transport sector compared to the size of the overall economy, that ratio is one of the largest in the world. Mexico is very transport intense based on what we can see in our data. And I think, I didn't include the units here. I didn't show that percentage in this slide because the point I really want to emphasize is that we think that the market will return. The size of the transport sector, logistics activity, et cetera, will return to where it was before as a share of overall economic output. That's really the message here. And we think that that return will happen around 2023. Secondly, we talked already about used trucks, but I'd like to look at this with even more of a broader lens, if I may, sort of briefly. There's really been a change in terms of how the market is being supplied. And when we look at first-time registrations, so not new trucks, but actual first-time registrations, trucks appearing for the first time in the borders of Mexico, that includes used trucks, and it includes imports from China. And if we look at those things together, what we see is that the share of the established players has really fallen pretty dramatically over the last decade. The established players had about they've had even more in 2008, by the way. That share in 2019 was about 87%. So there's been some pressure.
Andrej?
Yes.
We are over time.
Okay, I could go ahead and wrap it up very briefly. We think that the used truck situation will remain an issue, but not be any more significant than it is today. Also, we saw some decline in the share of Chinese imports in 2020. We do expect that to bounce back and actually increase slightly in the forecast period. But taken together with the strong overall potential of the Mexican economy, we still see significant upside to the overall market, with the potential to benefit many actors in the space, supporting hopefully all of you who are listening right now to this presentation. There is some other material in the slides, I think tucked in there, some information about the age profile of the existing on-highway truck fleet, and a few other things. As mentioned, if that's interesting for you or you'd like to find out more, please get in touch. We'd love to talk to you. I want to thank you again for listening, and thank you again to the organizers for the opportunity.